to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back. I guess you already got the intro, so we don't need that. Hey, how's it going? All right, there we go. We're off to the races. Never know how to start these things, but we've got Chris driving the bus here, getting us going on time. So great to see. And actually, we have a really cool guest host. Guest host? What will we call him a guest host? I might just call him a guest. I don't know. He actually is basically a resident manager here of one of the rooms at TRI. But we've got Steven on the call as a guest here today. Oh, did he just bail? Oh, there he is. Nope. Hey, you want to say hello to these good people, Steven?
Hey, good people. Good to see everyone.
All right. And actually, he just told us he lives in, of course, the Big Apple. And the Big Apple is in the process of banning Airbnbs, which is fascinating.
Yeah,
Wow, what an interesting. Oh, sorry.
not a blanket ban, but they're changing the rules that are making most Airbnbs pretty much illegal. But yeah,
Yeah, incredible. So not only are we going to get some really cool chart insight, talk a little harmonics, but maybe we'll find out a little bit about the fate of the real estate industry going forward from Stephen in the after party. So be sure to tune in for that. Stephen is incredibly smart and always insightful. And what I love about this process over the past 10 years, what I've clearly seen is there is no quote unquote one right way to trade and everything else is wrong. What I've actually learned in my experience teaching people, interestingly enough, over the past 10 years, is that each and every one of us humans is just slightly different in our own unique way. And watching individuals develop and blossom and sort of build out their market perspective and the way that they look at the market, I think is it's one of the special treats. I think they say that like no two snowflakes are exactly the same, and I'd have to say that that's a very similar thing with us humans. I mean, we're not. I mean, yeah, you do have your doppelgangers out there and that kind of stuff, but even like identical twins have different life experiences, so they look at things just from a slightly different perspective. So anyway, should be a really fun after party. Looking forward to it. And also too, we're heading into sort of the dog days of summer here. Summer doldrums. I think I heard even Stephen kick around an old broker term I haven't used in a while. But on balance, I think we should have a fun conversation in this relatively illiquid market state. And if anything, given what's going on in the world right now, maybe go a little bit slowly here. I don't think you need to push a chain here. So, as we sort of said there a moment ago, dog days of summer, end of summer, 25th of August. Basically, got one more month of this month of August left. First Monday of September is usually a holiday weekend. Labor Day here in North America. I don't know whether they have it as an actual holiday in Europe or Asia, but it is a pretty popular holiday here in North America where you sort of get together with friends and family and all that and have picnics and all that kind of stuff as we head out of the summer. So my hunch is next week's going to be relatively muted. Um, you know, historically, September is a horrible performing month in the market anyway. So we should all be cognizant of the fact that September is usually a bit of a bombshell as well. There were fiscal reasons years and years and years ago. The United States fiscal year end technically is in September. And so you see a lot of position squaring and that kind of stuff with regard to the US dollar heading into that fiscal year end. It is interesting to see too that if we were going to use one proxy to measure sort of the market, and actually I did this yesterday, it was super cool. Although I don't know where I have it. But actually, you know what? I think this would be a good sales pitch since it is the although I got to find where Chris shared it with me. And I actually think this is relevant too to the current market state. But Chris and I are getting these shorts up and running in earnest, and I really like the way that this thing developed. So right off the bat, probably a good idea to start off with a talk about the U.S. dollar index and how we can use it as a proxy for sort of what the sentiment of the market is. And in this kind of booming U.S. dollar bull market, that is not a hey, everything's happy-go-lucky and we're all going to get rich just taking tons of risk. And the theme of the video was just simply that yes, U.S. dollar index is booming higher. People are sort of running for the hills. And if we look at some of the other market-based risk proxies, the euro currency is just getting absolutely destroyed here, which I suppose should put a smile on guys like Stewart's face. But you could argue that a falling euro itself is inflationary. We've heard lots of talk about the euro and inflation and stuff recently. Then also, too, we see that the U.S. dollar index, when the U.S. dollar index is rising dramatically, what usually happens to stock prices? Well, usually they come off. So really great short. And actually, what I want to do is I want to do like a whole bunch of these, maybe like have like a whole library of these little shorts. So be sure to check the watch for them over the coming weeks and months. I want to build up like a library of like maybe like a few dozen of these things. And literally you can use them as, kind of like flashcards, right? You can just sit and flash through the shorts just to learn all the 30 years, 35 years of trading tidbits that I have for you guys. So be sure to check that out. It's going to be super fun going forward. Having said that, I guess we can put that away. This would be a topic of a short. We have, well, actually, there's a few of them. I guess the first things first, and this is almost funny. What does a company that might go out of business, most heavily shorted bank stock in the world, load up the web page to see what my bank statement looks like today, and this is the image that I'm presented with. Like, what the fuck? Obviously, I put the red lines over my account numbers, but their website's an absolute train wreck today. And of course, here is the TD Bank stock. It was funny. I went into the bank and I was bitching at them because, I mean, this bank's an absolute fucking train wreck. And I've told you repeatedly recently, everybody watching this, you all know this. Canada is a short. The Canadian real estate market is an absolute nightmare waiting to just explode. And you've got an idiot that's running the country that has no professional experience in managing disasters. And it's like we're all driving over the cliff at 100 miles an hour, and nobody even knows who's at the fucking steering wheel right now. It's just a disaster. So anyway, I went into the bank the other day and I was bitching and complaining because these idiots wouldn't move some money around. And I even said right to the branch manager, I said, "Oh, by the way, actually, I'm short your stock." And he's like, "Oh, really?" And he's like, "Oh," and back here, the stock was absolutely just falling off a cliff. And of course, at this point, he's like, "Well, thank you very much for shorting it. It gave me the opportunity to buy stock cheap." And I'm like, I wonder if I should call that manager up and ask him how he's doing on his purchases now. It's just an absolute disaster. So, that's an interesting anecdote to the market. They don't call it the fall for nothing. Of course, our breadth indicator here has been pointing lower for a while now, and we almost got to the point the other day where the breadth of the market started to firm up. We were almost there. It was like, and I even put a tweet out on my sort of personal feed. Keep in mind, we have two different Twitter feeds that I would suggest you follow. I think you should follow this TRI_PMA. It's a good sort of, PMA, positive mental attitude. The gentleman who runs this blog, Josh, you've heard me talk at length about him. I absolutely love him. And I think he has the most beautiful spirit. He's the guy that this is perfect social media stuff for him, and got the blue check mark and all legit and everything. So be sure to check him out. Then if you want sort of a crusty, salty, bitter, goddamn oligarchs, stealing our money Kind of, and then this guy here over in crypto stealing our money, right? Kind of, you want a salty look at the market. You can follow me. I'm a CR investor at Twitter. Anyway, point is that there was the tweet that I put out about the TD Bank just falling off a cliff here. But I also put out tweets, and I thought this was really interesting. Our screener system. You've obviously heard me talking about Tesla key reversals and all that kind of fun stuff. And it was actually really good to see that the screener, our daily bearish key reversals, I mean, just everywhere. This was insane when I woke up this morning. You know, it's interesting. We had a bullish key reversal in Lam Research, which is a pretty big semiconductor play. We had a big key reversal in the QQQs, and we had a big key reversal in Amazon, if I'm not mistaken. You can see Adobe's on here, Qualcomm, Microsoft, some pretty darn, the spiders, the technology sector ETF. I mean, these are some big names that are spitting out. Look at that, Amazon key reversal, Cisco Systems. I mean, this is KLA 10 core. Fuck me. Actually, I guess they're called Tech. Isn't that interesting? Oh yeah, okay. That's another ETF. And you know, like I actually pulled up the screen this morning. What was interesting was this whole rally in the market actually was started with let's see if I can show you. I don't have it just handy. But it was all started with where the hell? Well, we use Amazon. Amazon's pretty easy proxy, and of course, there's that silly TD Bank. What a train wreck. But Amazon started this whole bull market. You probably remember me. Well, maybe you do, maybe you don't. Talking about things like bullish engulfing bars off of the bottom. And if I'm not mistaken, I think Amazon even had a weekly key reversal here. And this whole bull market from back in the spring, where the hell are we? March. Am I looking at the right thing here? Weekly. Oh, there it is. All right. That whole bull market started off of this weekly outside upside key reversal. So these are daily reversals now. Huge technical damage being done here today. You can see where the M top is. So the irony of it all is that, you know, if you did really want to short this thing, you can make the argument it's pretty well-defined double top up there, breakdown. Interesting how the key reversal, even the rally just yesterday, couldn't even get back to that level. Guys wanted to short it so much. And then, you know, like I said, signals right across the board. We got just a ton of them. So there's the S&P 500. It fired. QQQs, it fired, and it's actually even sitting below the key reversal sell signal even now. There's that technology ETF key reversal. It fired. Microsoft, it fired. Interesting because Microsoft's been such a darling lately. Look at Meta, Facebook, just absolutely puking out here. Not like a lot of these names are kind of like, do I really want to break? I don't know. Maybe yes, maybe no. But Meta is just like, fuck you. I'm heading down. See you later. So that was quite remarkable to see. Amazon, there's the key reversal signal there. Advanced Micro Devices, big semiconductor play, huge key reversal. It fired. And actually, I'm just waiting on things like Adobe. He hasn't fired yet. So the point here is, wow, major technical damage right across the board in tech land. So be careful, folks. Thought it was interesting to see that even these signals, this is the daily ES futures contract, the September futures contract. There's a big honking outside downside key reversal signal that fired. And you can see I was even watching 43.7850 for the level, and it fired. So carnage right across the board. I was also interested too. I was a little bit surprised, but you know, the gold market starting to top out and break down, silver starting to top out, crude oil starting to top out, bonds topping out. And that actually was interesting because, you know, what was the catalyst that started all this? And I think it was actually, Mr. Powell's speaking there at the Jackson Hole Symposium. And I get the impression that actually the selling kind of started in earnest. Um, Yesterday, yeah, about, I don't know, maybe about 10, 11 o'clock in the morning or so, my time. And it just started to accelerate through the whole day. And, this is what I'm talking about. Basically, Jerry was speaking here this morning at the Jackson Hole Symposium. Thank you, Silent Archer, for posting that in the lounge this morning. And I'll tell you, it wasn't exactly a bullish statement for risk takers. He had continually talked about how interest rates still probably could head higher, how their war on inflation was still well and good and going. And he even said that he saw an uptick in a few inflation gauges, like in the housing sector recently. So I don't think the fight is done with. And literally, as he was speaking that, you can see that the bond market was trying to work its way higher here, even in the morning. This morning, as soon as he said that, the bonds all came off hard here. And more importantly, the long end, these are going to be relatively low. The as we move closer to near-term paper, this is 2-year bonds down here. You can see the damage is done a lot more extensively on the shorter end of the curve, meaning that the yield curve is still steepening, that they think that short rates are still going to have to remain high. But it's interesting how the long rates not really moving. They're just sort of stuck. And I like that thinking about the long bond, believe it or not, in here, because, and actually it might be interesting to check in with Steven on what he's seeing on the long bond. But, if we look at something like the long treasuries, I actually think that we're at some sort of inflection point here. We were looking at this in our TRI SOF club meeting the other day, where I can't even remember how I did this. I think we were drawing off of these lines. Something like there to there to there. And there to there to there. So and this probably isn't the best illustration, but it just feels like we came to some sort of descending wedge apex here the other day. So the fact that the long bond is just sort of parked, it's not rolling over and heading down as well. I think that was just a function that this market just got a little bit too oversold, and I think we hit like downside wedge objectives there. So with that said, in fact, actually, I think I have a better image of that over here. I thought it was over here. Anyway, maybe we'll dissect. Oh yeah, here we are. So that's what this image was. Let's go up, maybe do a daily chart. Yeah, there we go. So if this megaphone is for real, boom, 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 1, 2, 3. Believe it or not, actually, that should work its way back up top here. And I suppose you could argue that if these key reversals really are legit, I actually think that the stock market itself could work its way. I mean, how often do you guys hear me talk about reload zones? So I don't think anything's really shocking what's going on here. But which one is that? I think it's, yeah, this one. So there is our reload zone all the way down there. So could we see the market work its way down into that box? I don't see any reason why not. There's an 877 fib. I suppose, well, I don't know. The market didn't really respect 2.618 too much. But I guess the point here is that if this is a legit outside downside reversal, I don't see any reason why we can't just sort of work our way along this trend channel here down into reload zones. And I've actually heard a lot of people recently say that and actually you wouldn't see it on this, but they actually are saying that the scuttlebutt is that we probably need to, come right back down against these lows. Remember Jerry originally, oh, that's not going to do us any good. Actually, wow. Hopefully you can see this. It's kind of cool that we loaded this up, but unfortunately it's not really helpful for this conversation. But look at that. I mean, we've got the outside downside key reversal. That's a huge signal unto itself. Now, this isn't, this is off of the daily chart. This is the spot contract. So you don't actually see a key reversal here. But what I do see is that sure looks like, whoops, did that work? Oh, yeah. That sure looks like one well-defined head and shoulders top. So I don't know how this is going to play out, but just be cognizant that this stuff is floating out there. And remember I started off the conversation with, September is usually very, very nasty month in the market anyway. So what I want to do here, let's just remove all this crap. There we go. Just keep it simple. So, there's our trading range from the lows last October. And if we just do something as simple as reload zones, and let's flip that around. So, I mean, you can see where we should be thinking about being buyers. Should we be thinking about being buyers up top here? I don't think so. And it'll be interesting to see when we talk to Steven whether he has any harmonics up here that fired up top. Wicks and tails like to be eaten. Actually, all these trap bears down here, they would love to get released. So on any kind of serious dump, that makes sense. And then I think what I really wanted to try and convey to you guys was Mr. Powell originally said through this whole mess that what all he really wanted when, of course, here is the health crisis. And when we were down here and he was sort of begging for all the politicians to do all their stimulus and pass, legislation to save the bond market and all that crap. Here we are. All he really wanted was to bring the market back to the pre-sickness level right in here. And it was actually interesting because the stimulus package that they passed, remember the Fed's bazooka and all that, they basically achieved that. And then it was right here where Biden went fucking socialist crazy. And that stupid substitute drama teacher in my country went fucking communist crazy. And this is your whole inflationary bubble that really should have never happened. So it's interesting how the recent correction, they basically brought the market right back down to exactly where Mr. Powell said. When we were in here, he said, all I want to do is just get the market back to where we were pre-sickness. So it's interesting how they brought the market down into this level here. And then all of a sudden we have this crazy ass freaking rally that just popped up out of nowhere. And I get the distinct impression Mr. Powell wants the market back down in this area. So us getting like uber bullish up top here, I think is just asking for trouble. If you do want to buy and you're interested in buying stuff, I would strongly suggest that you keep an eye out for the market to work its way back down into this area. Yeah. Yeah, okay. Thanks, sir. So, it's the middle of this summer. Actually, I was talking with one day trader in our day trading room, and it's kind of like try not to push too hard. I get the impression there was a lot of monkey business around Mr. Powell speaking. We did confirm a bunch of these key reversals. Now you can see the market's trying to take a lot of this back. And then the question ultimately is why. So I think in the short term, this has everything to do with options expiry. So you notice that here is 8:30 right there. That is the European close. You can see off of this was when Mr. Powell was speaking, and oh boy, we're going to keep raising rates, and they're just dumping the market. Then when he was done talking at a counter trend rally, this was probably a nice short covering rally for the European close. So what's the plan following the European close on Fridays? Well, we've got the weekly options expiry coming up. So pretty good idea to pull up, if you do actively trade. And just simply ask, we could probably do this pretty simply over here. Where is the S&P 500 right now? And where do they want to take this thing out so Wall Street makes the most money? For 438.64 up $1.75. That's slightly delayed, but you get the idea. And you notice specifically on the put side, where is the heaviest open interest? Believe it or not, look at these big honking contracts way up top here. So believe it or not, I actually think they could probably bring the market all the way back up to this 442 area. If they can get the market to close above this area, it's a monster home run option wise. And you can see even right now at 438.70, up $1.80 on the day. If they close it out here, then basically all of these options all expire worthless. So huge objective here, obviously in the short term to get it above 440, but don't be shocked if you actually see that they are able to get this thing all the way back above 442. And that's the S&P 500. Over in Techlands, probably a little bit of the same thing. 0 days to expiry. This is the weekly options expiry here today. Open interest on the call side, you can see with the QQQs now. So there was the S&P, and like we said, if they can somehow get this market back above 442, they hit a monster home run. That's not outlandish from here. You can see it would just be taking out the highs from earlier today. I don't know. We'll see how that goes. QQQs, again, it was the tech stocks that broke there. Huge, just the biggest, ugliest outside downside key reversal here. Let's see, just from options wise, of course, like we said, the Europeans, 8:30, they're gone. So now they can just mess around with this market, excuse my French. And where would they likely want to take this market out, especially on the put side? Where's the heaviest open interest? You can clearly see it. It's at 360 here. And actually, man, as long as they keep the market up here, these numbers aren't egregiously large. There is a market up there at 365, but the anchor, I think, for this expiry here is definitely this 360. That's the heaviest open interest there. And I think it's probably just a little bit of gravy if they can get this market up above 362 there into the end of the day. So sitting at 361, if they can ramp the ES up, then they can probably get this thing up above 366 kind of idea. And if they do that, then all of these options expire worthless. And then notice it's just not that much open interest above 366. So that's what I think is going on here right now in the short term. But I'll tell you, bigger picture. We've done some nasty technical damage here today. As I said, Facebook really coming off. Amazon did confirm outside downside, and you can tell we already have the top there working on Amazon. Same thing with the NASDAQ. We already have the double top working. We're just in sort of gravy land right now. And again, major technical damage being done here. So there's your backdrop for heading into the end of August. I wouldn't be surprised if next week is relatively quiet. But one thing I will say is we might actually be getting close to some sort of pivot here. If next week is full of piss and vinegar, you might actually find that people start thinking that maybe the market's getting a bit cheap. And one thing that's sort of a bit of a bright spot is we've actually hit this Feigenbaum objective here on the US dollar. We had 8s and 9s coming in. Now you can see the 9 disappeared. We only have an 8 now on Tom DeMark, and we're starting to get the divs starting to form here. And Willie actually earlier today, when this index was up a little higher, Willie was actually officially stupidly overbought. So you can kind of see, I conjectured where was the top going to come in through all this. We had Jackson Hole. Turns out Jackson Hole, I guess, was the sort of ramp up pivot event. And now that we've hit Feigenbaums, we've hit bought objectives. I wouldn't be surprised if now this thing has to start topping out. Supposed to finish off a conversation with you here today in the public. The Bitcoin's going to put in just a big fat doji right on the candle body level for the weekly price chart. So nothing really dramatic coming out of here. If anything, the signal's a bit old now. So I don't think we have to worry too much about publicly talking about this. But here is when the algo actually fired a buy after that huge algo sell signal. I mean, and actually, it was really cool to see Josh post that on the Twitter feed. And you can see that basically prices stopped. And more importantly for you bulls, notice we got this candle body low, that candle body low, that candle body low. They brought the market down into this level, and you can see if this is, tails are anecdotal evidence that, hey, there's some buyers down here. Every time the price dips down here, it gets pushed back up. So what a big surprise. In come some buyers here today. So let's see how long this persists. I mean, we might find that after the close, we roll back over. I don't know. I'm not going to say that's hugely bullish. And if anything, given all of the weekly key reversal, or actually daily key reversal signals there on the screener and in the broader market, we're getting lots of anecdotal evidence from the market heading into September. Then maybe we just ought to cool our jets. Remember the weekly Bitcoin chart? That was the big message from our Coinigy shows recently, was when you have confirmed bearish divergence in MACD histograms, you're probably best just to cool your jets. Doesn't necessarily mean that Bitcoin's a short. I actually get the impression from this particular trade location that we're kind of just sitting in no man's land. We're not up against the highs. And if I wanted to short Bitcoin, I would be concentrating on Brian's favorite fib, reload zones, all that talk up top. If I wanted to be a buyer, well, I'd be concentrating on Brian's favorite fib, reload zones, wicks and tails to the bottom. But right here, it's just a big hurry up and cool your jets. Okay, I think I'll leave the public rant at that for today. Sure hope you enjoyed the edutainment. We'll do, of course, a nice free broadcast on Sunday for the broiler chickens. So be sure to tune in for that. Check out the shorts. Give us a comment. Maybe let us know here. If you got some value out of this, could you hit the like button, subscribe, ring our bell, and all that so you get notified that we're actually doing something on the site. Check out the shorts. And I suppose the final thing that we'll leave you off with is we do have a new school term coming up here. We do have a raffle that happens every term. So if you have an opportunity, maybe at the very least, pop on this page. I don't know. Chris, are we going to include this page in the description of the video here today? Are you here, Chris? I don't know whether he is.
Yep, absolutely. We'll be including the
Absolutely, he
description.
says. So at the very least, if you're watching this later on today and you haven't, sign up for the raffle. We might just give you the education program for free. Wouldn't that be kind of cool? And of course, you can always learn lots about the program and all the reviews and stuff that we've gotten off of this page as well. All right, everybody. Have yourselves a great day. Slow and steady wins the race. Don't take no wooden nickels. Remember what your number one job is. All the best and bye for now.